Good morning, trading world. It is May 10th, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. It's 7:50 a.m. on the East Coast, and I'm going to try to rush and get this out before the 8:30 a.m. CPI report. The title of today's outlook, CPI CPI. It's all about the CPI. If you can't tell by the title, today is all about the CPI report. It's that simple and binary. The CPI could trigger a run for a couple of days. The simple part of it is if the report exceeds estimates, stocks will fall, bonds will fall, yields will rise, and the dollar will get stronger. If we miss estimates, stocks will rise, bonds will rise, yields will fall, and the dollar will weaken. Whichever it is has the potential to carry strongly for a few days. I won't be surprised if we get a pop back up briefly and roll over from there. This is actually what I expect. Bonds are at a key breaking point. That line in the sand on the 10-year bond, the ZN, is 113.05. We break below that, look out, because the selling will be violent. This will also have a direct effect on the leading sector, which is tech. Tech is the biggest sector and also where the biggest borrowers are. So whenever the rate goes up, tech gets adversely affected. Move quickly to the key levels of the day. Let me get those up. All right, here we are back with the key levels of the day. Starting on the resistance side, our jack resistance is going to be the 410 to the 411 area. And our queen resistance is going to be the 412 to the 413 area. I look for some rejection somewhere in this high 411 to 412 area on the day if we get that pop up. It could be more than that, but that's my first area of rejection that I'm looking for. We have our king resistance area, which is going to be the 414 to the 415 area. Now, on the support side, we have our jack support at the 409 area. Then at the queen support area, we have 408 to 407. And then we have our king support, which is going to be the 406 to 405 area. The main thesis on the day is bearish, closing below the 410.93 with a projected target low of between 410 and 405. The alternate thesis is bullish, closing above the 410.93 with a projected target high of between 411 and 415. The main channel we are in is between 397 and 416. Now, yesterday market strength and breadth opened gap down, and even though strength and breadth climbed up pretty steadily from lows of the morning, price action diverged on the day. Everything is going to be based on the CPI report. If we miss, I expect strength to open very weak and probably pop up before rolling over and continuing lower. We stay within estimates, we could get a very strong push up and delay a rollover briefly. We do have dissonance between the technical side, which is bullish, and the quant side, which is bearish on the SPY. The futures have a bearish bias on the day as well, with dissonance between the technical side, which is bullish, and the quant side, which is bearish. This brings us to the scenarios of the day. All right. Our first scenario, let me just say like where we are in terms of probabilities. It is pretty much even across the board. And if you go through some of the bigger stocks, most of them are at a very important support level. Definitely the bonds. Apple is at a resistance area, I believe, but everything is at these pertinent areas where we can kind of flip one way or another very easily, whether we break out to a new level or drop. So this brings us to our expanded range day structure, which is the first day type structure in my list today. What I'll be looking for most, even though probabilities are pretty much even across the board. We could get a pre-market pop, experience some dip buying early, bringing us back to test resistance, giving another try at breaking resistance, but rolling over later in the day. This is our expanded range day structure. All right, here we are with the second scenario. It's going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area after a nice rip on the CPI numbers. We kind of come back to earth and then pick back up, continuing higher toward the Jack or Queen resistance area. Find midday chop around either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. So that is our rounded reversal day type structure. I do have a vice versa alert for it as well. We could CPI numbers could come in hot, and we could get pretty much a really swift down move, and then we would get that opposite reaction. We would get a continued push lower toward the Jack or Queen support area. Find our midday chop around either the Queen or King support area, and then we could get a push back up with the same amount of force or energy that we went down with the first part of the day. So that is the vice versa alert on our rounded reversal day type structure. All right, our last scenario is going to be our trend day down. We open gap down, start with a push back toward the previous close, represented by the blue line. We find resistance on or before that previous close. Then we begin the downtrend for the day. We usually find our midday chop around the around either the possible Queen or King support area. A key to watch today will be targets around the 405 that could put us into a failed trend day situation. And also a target around the 414 area if we get our vice versa scenario. We could possibly hit what looks like the beginning of a trend day up if we get this bounce pre-market. And let me just go and show that we could get pretty much a bounce on CPI, and it kind of looks as though we're going to go hit that trend up day at some point and we could reach that 414 area, and we could have a failed trend day. So those are the scenarios that I'm preparing for. It's a very binary day, meaning everything is based on how the market reacts to the CPI numbers. So this is one of those days where you just have to kind of sit and wait until everything plays out and then join the wave. I hope this helps. Again, the most important part, or your most important job as a trader, is to protect the capital that you already have. And we do that by knowing the risk on any position that you take, and also the risk in market conditions. And being that the condition is so binary, there is no reason for you to try to beat the numbers. Just wait for it to come out and then take your positions after, if we get to an extreme. Again, I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.